So I think we're at a real turning point for responsible investment, and I think we're seeing a huge amount of activity, particularly here in Europe. A number of big things are happening. Investors are using their voice as shareholders in AGMs of major corporations to get their changes in practice, whether it's on gender or low pay or climate change. We're also seeing investors actually moving their money, moving their assets, moving away from coal. 100 companies have now committed to move away from coal, moving towards green and sustainable assets, green bonds and so on. And actually the real problem is there's not enough green assets, not enough sustainable assets. So moving money. And the third is, I think, that investors are also realizing that they need to engage in the policy process, particularly here in Europe. We have a Sustainable Finance Action Plan, and that's going to set the rules of the game by which investors are going to change their money. The fourth thing, which we always forget, but is actually clients. And then really, really important to talk to clients. All the surveys say that European investors want environmental, social governance factors included. And I think still the fund management industry still needs to do more to listen to those clients and see how they can design products that meet their needs. So the just transition is a phrase that has entered the Paris Agreement, and essentially it means making sure that as we make progress to climate change, we also are thinking about the interests of employees, the interests of regions, the interests of consumers and so on, so that it is socially acceptable and fair. And investors have a role to play. Investors have a role to play to communicate to the companies they own, to make sure they have socially responsible practices. They can allocate their capital, particularly impact investing capital, to regions. And again, they can talk to governments to make sure that governments have their policies in place. Not just a carbon price, but as we've seen in Paris and in France with the Gilets jaunes, a carbon price that is actually properly designed so that actually it is socially acceptable and doesn't actually lead to the political process we've seen. So I think investors actually have the good fortune of having many strategies to deal with climate change. And I think actually from a fiduciary point of view, from a materiality point of view, it is important for investors to actually move away from certain assets, the industries of the past, such as coal. So I think divestment is an important part of the toolbox. It's not the only one. So divestment, engagement, best in class, and then actually putting money into the solution providers as well. And particularly more in those areas where we need new technologies and also where they have sort of high social benefits, so-called impact investment. So many tools in the box, not just investment.